Welcome back to our channel, where we simplify complex compliance topics. Today, we're diving into one of the most critical pillars of banking compliance: identification and verification. Whether you're a seasoned compliance officer or just starting out, this video will help you understand how banks know who their customers really are and why it matters. Please make sure you subscribe to our channel for more videos related to AML and KYC concepts. So let's get started. What is identification and verification? In the world of KYC, know your customer, identification and verification are the first steps. The key distinction between identification and verification is: identification is the process of a customer providing their personal details. This is the what. What's your name, your date of birth, your address? Verification, on the other hand, is the process of the bank confirming that those details are true. This is the proof, proving you are who you say you are. Our identification is about collecting personal details: name, date of birth, address, nationality. A verification is about confirming those details using independent and reliable sources. Together, they help banks prevent fraud, money laundering, and financial crime. Why is this so important? It helps banks comply with AML regulations. Prevents identity theft and fraudulent accounts. Supports risk-based customer profiling. Let's break down the details that are typically collected. Banks need to collect and examine a variety of personal information. This usually includes a full legal name, trading name, previous name, or aliases. It is important to identify and verify the correct legal name of an entity to differentiate it from organization with similar names. A registered address, country of incorporation, country of operations, business address. The primary place of business and registered address aids the bank in determining that they are not engaging in business with a client based in nation under sanctions or one that carries a high risk. A date of birth, date of incorporation. This confirms the customer is of legal age. And, if it's an organization, it helps to distinguish an organization from others with similar names. A government-issued ID number, legal registration number. It is a unique number assigned to an entity in its country of jurisdiction. It may be tax identification number in case of an entity or passport, driving license, passport etc. in case of an individual. A nationality and country of residence. This helps with risk assessment, as some jurisdictions have higher financial crime risks. A legal existence of an entity. Here we try to ascertain if corporate entity is still active and not dissolved. Similarly, if it's an individual, we need to make sure that she is alive, not dead. Now for the verification part. How do banks prove these details are correct? They rely on independent and reliable sources. These are documents or data from a third party that aren't easily faked. Common examples include a government-issued photo IDs, like a passport, national ID card or driver's license. These documents must be current and valid to be accepted. A proof of address, like a recent utility bill or bank statement. A biometric data, such as fingerprints or facial recognition in some digital processes. A company registries in the country of incorporation. A local as well as global data providers such as LexisNexis, Equifax, ID&V, WorldCheck, RDC etc. Credit bureaus and government databases. Company websites. Some bank also considers company websites if it is listed in recognized stock exchanges. Customer emails. When information is not easily accessible through unbiased and trustworthy sources, bank also rely on customer emails and statement to collect data. Some challenges faced by banks during identification and verification. Fake or forged documents. Inconsistent data across sources. Cross-border verification for foreign nationals. Privacy concerns in data handling. That's why banks must use layered controls and ongoing monitoring. Traditionally, it was all done in person at a branch. A customer would present their physical documents to a bank officer. But now, with digital banking, a lot of this happens online. Banks use technology like video calls, live photo uploads, and third-party databases to perform these checks remotely. Technology has revolutionized this process. Modern systems use optical character recognition, OCR, to read information from documents automatically. They also use facial recognition to match a selfie to the photo on an ID. This makes the process faster, more secure, and more efficient for both the customer and the bank. Best practices for effective identification and verification. A. Use multi-source verification. A. Apply risk-based approaches. A. Keep systems updated with latest regulatory guidance. A. Train staff to spot red flags and anomalies. Identification and verification aren't just checkboxes, they're the gatekeepers of financial integrity. Thanks for watching this video. If you found this video helpful, give it a thumbs up, subscribe for more compliance insights, and share it with your team. Got questions or want us to cover a specific topic? Drop it in the comments below.